Hi there, I'm back this week. It's my favourite time of year. Right after Christmas comes the Christmas Grinch in the form of land tax. And if you're sitting out there thinking, ugh, here we go, I've received another land tax assessment, I'll say to you what I say to many people and have done so for many, many years. Congratulations. Just bear in mind that the fact that you have received this land tax notice of assessment simply means that you are the holder of a property that's potentially over on the land tax threshold, which is quite significant in New South Wales, the threshold itself at $1,075,000. And while that land tax can be a bitter pill to swallow, it is really important to remember that this is due to you owning this really solid, most likely appreciating land tax itself is something that is somewhat of a paradox. On one hand, as a landlord, it can really knock around your investment. These land tax liabilities can be quite substantial. And what that forces you to do as an asset holder is to look to maximise your return on your investment. What that does then, in simple terms, is it does drive up rents. And we all know that we really do have a rental crisis at the moment. I don't think that there's too many people that can argue with that. The landlords on one hand are saying it is taxes like land tax that are driving these rents up, and the tenants, on the other hand, want reduced rents. The government is in the middle saying we want to fix this rental crisis, but they really seem quite rudderless in terms of how they're going to go about it. Land tax is something that must be front and centre in those discussions. So I do somewhat empathise and sympathise the landlords out there who are paying those land tax liabilities, myself included. However, for me, it's something that I accept as effectively a cost of doing business in this asset class. What we do understand is this tax is not going away unless there is quite a substantial shift. What we need to bear in mind, particularly, I'm quite New South Wales focused, being Sydney based myself, land tax is a state-based tax. It is the federal government who is trying to do something about this rental crisis. Trying to get those state and federal governments to work together is like herding cats. So the simple fact of the matter is, for landlords at the moment, accept this as a cost, an annual cost for potential purchases of property. Factor it into your calculations when determining your return on investment. If this land tax is something that's going to tick this over the edge from being a strong investment to being something that's quite mediocre in terms of annual return, perhaps you need to do something like diversify across other asset classes. It gets some exposure. If you really like property, get some exposure to property, but perhaps when you get to that land tax threshold, it might be time to consider assets outside of property. Again, while I do see both sides of a story here, it is something that we have to live with until the governments can get together and really find a solution. When that'll happen, that's anybody's guess. In the meantime, I'm TC, and that's my 2 cents.
Now, before you jet, if you've got something out of that, like or subscribe. If there's anything about which you'd like my 2 cents, hit me up at this email address. Or if you'd like some business, accounting, or tax advisory, message me at this email address. Or find me at tcs2cents.com or sabtees.com.au. Have a great morning, afternoon, or evening. Cheers.